Harsh Shah, the CEO of Indigrid, joins us now on the show. Thank you so much, Mr. Shah, for joining in. Let's talk about what went by in the second quarter. Has the fact that we are sort of inching towards normalcy as well aided your performance?
Yeah. So thanks a lot for having us. I think we already predicted that our performance would be similar to what we have delivered in early part of the lockdown itself. We own transmission assets which are not directly linked to consumption of power. So our tariffs and P&L pretty much remain stable. However, we did see a shortfall in collections in quarter one, which we are expecting to get collected back in quarter two. And as we see today, we have collected about 113%. Which showcases part of the collection which we had delayed in quarter one has been collected in quarter two. So we see that part is certainly a revival, and including power demand on a month-on-month basis, which is a very good indicator of economic activity, has picked up. And we're seeing September, October numbers which are far higher than what it was in 2019 or pre-COVID.
Right. Sir, I just wanted to understand one thing, of course, it's an instrument where you tend to give interest or dividend in the form of interest. Can you just tell us in terms of activity, if things don't pick up, what is the plan B? Or there is no such issue with even the current operations and, the way things are going, it's very easy, to go ahead and manage any obligation at this point of time.
Yeah. No, so we are very well positioned right now. First of all, things have already picked up. Even if things would not have been picked up as fast as we are seeing in quarter two, I think we have a very strong balance sheet. We are pretty stable. And as I said, our revenue and cash is not dependent on power flow. So our contracts take or pay as a capacity charge. And therefore, we believe we will still be collecting money. Maybe a little bit of part would have been delayed, but that would not impact a strong balance sheet like ours. And therefore, I think our performance would not be impacted even if things were to, remain over here for some time or even slightly go down. It's a fairly resilient business from the current market conditions that you see.
Okay, so Mr. Shah, let's talk about two things. Firstly, of course, are you saying that, demand and collections are improving on a sequential basis and you continue, you're hopeful of seeing that trend going forward? If you could just sort of throw some color on the recent projects added, which from what I understand is 140 crore rupees to your asset portfolio. Where does your key focus lie going ahead?
Okay. Just to correct it, it's 14,000 crores. We added about 1,400 crores in this quarter two. We were earlier 12,500. Now we are inching 14,000 crores of assets. Coming to your first question, we have seen sequential improvement on collection. So it's not, while I give a quarterly number, on a month-on-month basis, the numbers have gone up and peaking up in September to about 125%. So we have seen consistently month-on-month basis numbers going up, and that gives us confidence that it's not just one-off month or an impact. It is a consistent month-on-month improvement that we have seen since the month of May. So we are pretty encouraged and confident with overall recovery of the electricity consumption and the sector per se. And the two assets that we acquired are part of our core business. We acquired two transmission projects, one from Sterlite Power and the other from Techno Electric and Kalpataru Power Transmission. All of them are good developers in the sector, and we look forward to acquiring assets in this as well as the solar sector.
Okay. Apologies for that. I stand corrected. But Mr. Shah, I really appreciate you joining us today on ET Now. Thank you so much. We hope to have more such conversations with you, and congratulations on a good set.